My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today our special guest is Nic Espanet. He is zooming in from beautiful Fort Worth, Texas. And Nic is a full-time real estate entrepreneur, syndicator, focuses primarily on multifamily properties. And Nic has been doing this full-time, I believe, for the last 5 years as a full-time.
Yeah, full-time. Yeah, 5 years.
Full-time. Before that, you were doing a part-time, but you were a physical therapist. But the last 5 years, this has been the full-time gig. So, Nic, welcome to the show.
Hey, thanks for having me, Dave. I'm excited to visit with you.
So, tell us a little bit about what kind of properties you focus on, where they're primarily located, and what the portfolio currently looks like.
I'm in Fort Worth, Texas, so we focus in Texas. At one point, I was looking out of state, lots of different places, and my business partner and I said, why are we looking at places we got to get onto a plane when we live in Texas, which has some of the greatest opportunities? So then we were initially looking just in DFW, but we kept getting beat out on deals. So we pivoted a little bit and started looking in secondary and tertiary markets in Texas. So
okay,
we pulled up any city with over 100,000 that had at least 3 economic drivers and had positive job growth and positive population growth. So we
how many of those cities are there outside of Dallas, Fort Worth, Houston, and San Antonio and Austin?
Probably 10.
Okay.
10, and I'm just guessing. We started looking at Amarillo, Lubbock, Bryan College Station, Tyler, Abilene, San Angelo's probably a little small, Bernie, and then Corpus Christi, Galveston. And we ended up getting our first deal in Abilene, Texas, which is about 2 hours west of where I live in Fort Worth, and its population's 125, 130,000.
What size was that first one?
It was a 100-unit property. So
that's a good size for your first multifamily. Nice.
Yeah. We jumped in full force and didn't really plan on staying in Abilene, but once we knew Abilene, we could move faster when something was for sale, and then once we have scale, got up to 5 properties, about 754 units we had in Abilene at one time. And so with having that many units within basically a 5-mile radius, our payrolls, we can share payroll people, so we can come in better payroll, we can better contracts with vendors. So we have a bit of an advantage in that market now. It's being, at one point, somebody told me we were the second largest owner in Abilene. Nice. And I have a goal to be the second largest owner in Dallas or Houston. Actually, I don't. I like my Abilene properties more so than I do my DFW and Houston properties.
So what does the portfolio look like today, 2025?
Today, we sold 2. So at max was 9, and sold 3. At max, we had 9. Right now, we have 3 properties in Abilene, around 500 and mid 500 units, 2 in Houston, a 200 unit and a 269 unit. And then one in Arlington, Texas, right in the middle of DFW, that is 168 units. And
okay, well, let's rewind a little bit, even though I don't usually go back in the backstory, but I'm always curious. So you were working full-time as a physiotherapist, is that correct?
Right.
And you got into multifamily, and your first deal was 100 units. So I know physical therapists make pretty good money, but that's a pretty good size deal to bring down. So financially, how did you guys come up with the down payment, closing costs, all that stuff?
Yeah, we did a syndication. So the way I learned to do this was through a mentorship program, and I got to meet other people within that group. We partnered with myself and a guy that I met he was maybe 6 months ahead of me in the program. So we were basically both new. Partnered with somebody he had known for a long time. He'd gone through the single family world. This more experienced guy we brought on, he helped us raise the capital. We raised just under $1.5 million, like 1.49 million. And, but most of that came from the experienced person. We gave him a little more of the equity on that first deal. We did a second deal with him. We split everything by thirds. And again, he probably raised more of the money, but we had been in that program for a couple of years now at that point. So That was just under $2 million that we raised on that one. It was 124 units. And so from there, we brought in a couple other partners and got a 228 unit property and about a $5 million raise on that one. And so, by that time, I felt like I was raising a more my fair share. And then COVID hit after that, and we
Mm.
kind of that group split up, and myself and the original guy, he and I bought a 128 unit property, just the two of us at that time. Now, again, it was a syndication, so we come and invest 50 to 100K each, but then we collected on that property we raised about just over $3 million between the
Nice.
two of us. And so
So what would you say at this point, Nick? Are you guys the sponsors? Well, it sounds like you're kind of lead sponsors on these deals. Do you continue to bring on co-GPs, or do you and your partner pretty much handle everything now?
yeah, even on the last one was it was across the street from two other properties that I
Yeah.
owned. We'd always looked at it, but I knew it was getting a little more challenging raising money. We closed on that one in December of 23, but I talked to a single check writer and they were very interested. It was about a little over $19 million property, and I didn't think we could buy it on our own, but had somebody that I was going to raise about $1 million. They were going to bring the other 8 million, just a single check. Well, they ended up changing their mind, but this property that I was like, this looks like a great opportunity. I hate to lose it, walk away from it. So some other syndicators that I knew had been successful. I had a good relationship with them. I called and offered them about half of the equity in the deal if they raised half the money. And so
Nice.
they're also one of them primarily is he and I do we're the asset managers on the property, the main asset managers.
Hmm. Yeah, I was going to ask you that. So what is your role primarily in the properties that you have? So what does asset management look like for you, Nick?
So with these, with agency debt or Fannie and Freddie loans, which
Mhm.
is they work on housing in the U.S., but you need to have third party management. At some point you could take it over on your own if you had enough experience, but they require third party management. So we pay a management company a fee. They manage, they hire and fire their employees. But as an asset manager, we oversee the day not day to day. I'm not in my properties that are running smooth. I look at once or twice a week some certain KPIs that I review, but we're making sure that occupancy is there where it needs to be, collections, that units are getting turned in a timely manner and ready to be re-rented. That rent we're pushing rents. 100% occupancy isn't necessarily your goal. To me, that says our rents aren't high enough. If we're hitting 100%, we need to start pushing our rents up a little bit. Probably should have been pushing them up a little before that. So we rarely hit 100, and we'll pat everybody on the back when we do it. But like, all right, you know what that means? We can push rent a little bit. But so
Okay, so what would you say over the years now? You've been doing this 9, 10 years. What's kind of your secret sauce or your superpower that is easier for you or comes naturally for you that other people struggle with when it comes to multifamily?
couple of things: getting out, meeting investors, and finding deals, building relationships with brokers,
All right.
and trying to get a first look at a deal. There's truly not off-market deals, and multifamily are not that common because a broker may bring it out before it goes full market to a handful of people they've closed deals with before. But I don't ever think I'm the only one they're bringing it to. They're probably bringing it to 3 to 5 people that they'll give it a chance at. And so I think having those relationships with brokers gets my foot in the door to be able to go after the deal. That last one we closed on, it was not a fully marketed deal. We made an offer on it, and we've made early offers on other deals too. And then raising the money, getting to know investors, getting out there and being able to raise a bulk of the capital for the deal. And then and getting it closed, and once the deal is closed, my role is kind of the operations of the asset management. One of my other partners, he does 99% of the lender communicate, 100%. If anything, he'll ask me and I'll get it to him. And he does the communications with the lenders. He gets our property tax arranged. He gets our um, insurance. He goes and shops our insurance once a year, and then I do operations kind of over that, and I look over the federal income tax, getting everything to the CPA to get our
Mm.
K1s out to everybody. And I also am in charge of our investor communication. We send out a monthly newsletter.
Oh,
So
yeah,
that
very
is,
good.
my wife, well, my wife, we have now have a VA that does all the data, the objective numbers. She enters all that. I come in and write a paragraph or two about, this is up because of X, Y, or Z, or down because of this. Here's what we're doing to improve it or work on it. And so I'll put the color in it. Just kind of what's, a paragraph or so.
Nice. So, Nick, at this point, you guys have probably worked with quite a few investors, LPs. Sounds like you've gotten quite good at connecting with people, raising capital. What what do you find works best for you these days in 2025 for connecting with and enrolling new investors into your opportunities, into your
Well,
properties?
it has changed a lot. Early on, when things were booming, we went to real estate events and everybody wanted to get in.
Throwing checks at you.
Yeah, I mean, we would have a webinar and we'd have a wait list. I mean, sometimes they had to work more.
Yeah, those are the good old days. What are you doing now?
Now I'm getting back to beating the pavement and attending networking events. We are starting getting in this when it was booming. I've had to pivot because now I've had to learn to start doing social media. We're hiring. And it's being in my mid 50s. That's not natural to me. So we are hiring to help get out monthly newsletters, not only to our current investors, but and then also trying to get stuff out to social media to draw people in,
Yeah,
and then just also going to some events, meeting some potential funds, and seeing if that I haven't really found one that matches exactly what we're wanting to do, but it would be nice to have half the capital early on, know it's there,
yeah,
but instead of it would be nice to have a handful of $1 million checks instead of a bunch of 50, $100,000 checks.
yeah, most definitely. No, that makes sense. Well, it sounds like you're doing a good job with the ongoing investor communications with your newsletter, and now that you're getting into the social media side of things and networking, getting out there too, and all that, that makes a lot of sense. So, where do you see things? Well, first of all, how did the recent unpleasantness in the whole multifamily market affect you guys with your business?
We are still, I mean, we have one floating rate deal that we're fighting for. We'll see where it's going to shake out when the term expires. I think
Mm.
there's going to be a lot of pain in the next 6, 12 months as these floating rate deals that were bought late 21, 22, or the terms are starting to expire on them. But I
Yeah,
also think that means opportunity. And I saw a presentation recently where, oh, well, I don't getting ahead of myself. So, all of our other deals are on fixed rate. There's some that we've hit some headwinds with, that's what I'm saying. Abilene, it did not build out as much as DFW and Houston. We had so much supply coming on in the
mm,
major metros that we haven't been able to push rents. Whereas my tertiary market in Abilene, we have. So we're looking there. But I think this is going to bring an opportunity to, as these deals are coming back in the market. And we got to remember when it's hard, that's when you want to be buying. When it was
yeah.
easy, I should have gone to the beach. It was easy to buy stuff.
I hear you, man. 2020 hindsight. So, what are you guys hoping to accomplish in the next 12 months or so, or even in the rest of 2025?
I've got an LOI out now. I'm underwriting deals. I mean, a lot of them are the seller and buyer are not quite lining up, but eventually they will.
Hmm.
So we're still underwriting deals, and when one comes together, we sent an LOI in earlier this week. We're tweaking a little bit, looking at some other deals. So we are buying. We're also considering. We've got we get BOVs on our properties every 6 months, trying to see what the value is, and we'll consider selling. We've got one, the fourth property we bought. Um, it's getting close. It's operationally going well. And so I don't really want to list it while everybody thinks anything coming on the market is distressed. But at the
Hmm.
same time, I would like to get investors their money back if there's buying opportunities now to return money that they can redeploy. Because we've hit that 5 year point. We're not going to grow a whole lot from here. So if
Yeah,
we can get their money back, I mean, we're going to hit very close to our projections, but 1 year, 2 year more, it's not going to skyrocket. So if we can sell it at a reasonable return at a reasonable price, we would sell that one just to get some money back in investors' pockets back. Because like you said, some of that stuff from 21 and 22, people are having to feed those and hold
Yeah.
on to them and may end up losing capital.
No, yeah, that makes sense. Well, I'm glad you've weathered the storm intact and strong and seeing what's coming down the pipeline.
I didn't have any gray hairs.
You're doing way better than
There's
So-
been some sleepless nights, but it's
yeah,
I think
that's the life of,
I would say
an
we've done
entrepreneur.
everything that we could do on these deals, but macroeconomics of interest rates staying high just are gonna cause some pain.
Definitely. Nic, I'm sure there's lots of people watching or listening to this who'd like to connect with you. Where should they go?
You can check out our website. We have flexequitygroup.com. So it's FLEX equitygroup.com. And there's a place in there you can click for our white paper and put in click in there to get onto my Calendly link. I'd love to have a 10 or 15-minute call to get to know anybody. If you have any questions, I love teaching. I went from healthcare, really having zero real estate, or not really, but having zero real estate experience other than buying a couple of single family homes that my wife and I lived in, to buying a 100-unit property in less than 2 years.
Yeah, that's great. Thanks a lot, Nic, and everybody. Take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.